Mira Business FM, Dubai's home of business radio.
This is Mira Business FM, and it's insurance now, or risk as well. How are companies across Africa and the Middle East rethinking risk, from climate shocks and supply chain disruptions to cyber threats, market volatility, and regulatory change? EIRS is a global insurance broking and risk management firm. They operate across 11 African markets. Strategic hubs are in Dubai and in London. And what they do is holistic, data-driven risk solutions tailored for emerging markets. And they cover both traditional insurable risks and complex non-insurable exposures. Nolwenn Allano is the Chief Commercial Officer of the EIRS Digital Insurance Ecosystem. Joins us now. Nolwenn, it's a pleasure to have you on the program.
Same here. Good morning, Tim.
Good morning. General question to begin with, if you don't mind. Really, your thoughts broadly. This region and the geographies that you guys service, these are insurance markets experiencing significant growth, both in terms of economic diversification, population growth, the expansion of mandatory insurance schemes. Can we begin with the market context, the kind of where we are, if you like, the market as you see it since you were formed in 2019?
So good morning again, Tim. Yes, indeed, the more risk you have, the more the insurance market is going to grow. So it's a good asset to have when you're investing into insurance. So you can look at the market. You mentioned 2019, but let's look back at 5 years ago. Basically speaking, what used to happen in over months, now it's happening in few days. So you mentioned about geopolitical tension, regulatory changes, market volatility, etc. So they are moving at a very unprecedented speed and nearly requiring organization to go through, I'm a bit exaggerating, but a weekly risk assessment. As simple as that. So people tend to buy, especially large organizations are more risk sensitive today than they were 5 years ago. And they tend, let's say, to buy insurance. They have less resistance to buy insurance compared to a few years back. As simple as that.
Yeah, it certainly has changed. I mean, the UAE and I guess Saudi Arabia are the biggest contributors to the expansion. I was looking at some figures earlier this morning. The UAE's gross written premiums up 21%, just over that in 2024, something like 64.8 billion dirhams. We don't have an equivalent figure for 2025 just yet, still early days in the year. But it's true to say that the UAE holds a pretty dominant position in the regional insurance sector, and I guess there's no reason to suggest this growth isn't set to continue either.
Definitely, this role will continue. When you look at Saudi Arabia, the main role has been so far medical insurance because it's compulsory, motor insurance as well. And now you have more and more projects in Saudi Arabia, so more and more risk, international investor, international contractors. So they are buying locally, and you have a strong and sound local insurance market in Saudi with very good reinsurance capacity as well. So it will continue for sure.
You put forth a 5-year timeline there. You went back 5 years. Can we talk about risk today, particularly in emerging markets? What has fundamentally changed compared to 5 years ago? So we'll stay within that timeline.
Yeah, definitely. So we mentioned about a certain type of risk of this. The risk perception change, the pandemic has clearly accelerated digital adoption, especially in Africa and in Middle East, maybe by nearly a decade. So of course, it's bringing huge opportunities, but also exposing businesses to cyber threat and interdependability as well, that we are not prepared for. So I will say what changed now in 2025, 2026 is that clearly data for organization, and it was clearly not the case some years back, has become the new currency clearly of risk management today, and we mentioned it very shortly, organization need to rely on data and daily data, updated data to update their risk registers and their business continuity plan, which often this business register, risk register, business continuity plan were not in place 5 years back. So this is new for, I say, growing organization and large organization. It's not yet true for SMEs.
Businesses are dealing with supply chain disruptions, with cyber threats and regulatory shifts. And it's all happening at once, obviously. How are African and Middle Eastern companies responding to, I guess, a more complex risk environment?
Or you have to dissociate leading organization, large companies, and SMEs. So for leading companies, large organizations in the region, they are clearly moving beyond treating insurance as a compliant checkbox. They are integrating risk management into strategic planning. This is very clear. We see it every day, particularly when you talk about trade credit protection, cash flow security, political risk mitigation, and cyber protection, which they know very well is a critical condition to their long-term survival, okay, to be protected against that, okay? So when these companies come to us, this large organization or sizable organization, when they come to us, EIRS, they usually understand well the impact of any risk on their business. Well, having said that, when large enterprises are adopting sophisticated risk framework, SMEs clearly remain largely underinsured or uninsured when it comes to supply chain or cyber risk. I would like to maybe make a comment here on the importance of the banking system. What we witness here is that banks are playing a quietly, how should I say, transformative role in this shift. Financial institutions, and we visit them, we meet them, we speak to them weekly across the Middle East and Africa, are increasingly making a risk assessment a prerequisite for SME financing. So when SMEs reach the level for accessing credit from regional banks, it can be in Africa, it can be in Middle East, it can be in any countries, they face pointed question about how they are managing their operational risk and what will happen to their business if key threats materialize. So it's this banking, how should I say, due diligence is definitely creating organic demand for customized insurance solution. I mean, for the last 18 months, maybe, we have been receiving 2 or 3 requests weekly from African and Middle East businesses whose bank have mandated trade credit insurance to cover non-payment risk before they can extend banking facilities. So this banking effect is definitely reshaping the region risk culture. So banks are not just providing capital, but they are as well driving a maturation in how emerging businesses think about resilience and continuity. So this is something we clearly witness for SMEs.
You guys offer and deliver, I mentioned this in the introduction, Nolwenn, holistic data-driven risk solutions. What does that mean in practical terms for SMEs, but also what does it mean for larger enterprises?
That's a good question. So I would say there is a difference between the traditional insurance and what we do. Traditional insurance or risk advisor, what they do, they sell what is available on their shelf. So they sell you a product. We don't sell a product. We want people to buy an offer. So we take the opposite approach. We start with the client reality and we build solution around it. In practical terms, what does it mean? I mean, it means that clients receive coverage and advisories which are really customized or fitting their specific market context. We factor in our approach, in our risk approach. And the way to outsource this risk to insurance, local political dynamics, especially in Africa, currency volatility, regulatory change, and all the commercial ecosystem in which our clients operate. Okay, so we cannot, for example, when a manufacturing company in Egypt come to us, we know they face something different. That's a risk that can be triggered by the same business in Nigeria. Okay, so our approach that is definitely not to sell insurance, but to get people to buy the right product. Okay, we don't have a push approach, but we have clearly a pull approach. So this one is mainly what we do for our clients. So we have an advantage, we should say on that our insurance vertical has been built up on the foundation of ETG Export Trading Group, which is a 60 years old agro conglomerate operating across 45 African countries. And over the years, over the decades, we developed it sophisticated in-house risk modeling out of necessity, of course, managing our risk from crop failures and port disruption up to currency crisis sometime and political transition. So we have inherited that institutional knowledge, and we transform it into a competitive edge for our clients. So this is basically what we offer to our clients. So we bring to SMEs, let's say, organization tools which are usually available to multinational. Okay, we give access. Now for large organizations facing complex or standard or non-standard, indeed, I will say, risk exposure, we go a bit further. We help them build comprehensive risk mapping framework and customize risk mitigation strategy, which are coming indeed from our own experience as a group. Okay, so we come more like on a model of a risk architectures, and back, of course, by insurance capacity.
Some of today's threats, some of the biggest threats, Nolwenn, aren't traditionally insurable when it comes to things like market volatility or cyber exposure. How do you help businesses manage risks that they simply can't insure?
So this is a question we are getting. Your question is a question we are getting more often now from large organizations which are coming to us and say, it's not anymore. There is a shift from the question before. Our clients say, can I buy insurance for this? And now the question is, how can I reduce my vulnerability and increase my capacity for adaptation? Sure. Okay, so this is where we are getting a question, how we answer to that. At EIRS, we have a team helping organization to build up what we call enterprise risk management framework, ERM, which is addressing a whole series of risks, such as we talked about that at the beginning of the interview: price volatility, logistic disruption, and regulatory changes. Then we can guide our clients when we do this ERM, if not ERM, but enterprise risk management, ERM, yes, indeed. We can guide our client in developing contingency plan, and they can decide then how to transfer on the non-insurance market their risk. So they can use structured financial instruments, such as a forward contract, for example. So as simple as that. This is what we're offering to these clients who come with the question you raise.
You lead EIRS's digital insurance ecosystem. How is technology changing the way that you design insurance, that you deliver insurance and use it in emerging markets?
From our experience, technology is definitely democratizing access to sophisticated insurance solutions that were previously not really available or affordable in emerging countries. Okay, we talk about parametric insurance, etc. Okay, so this is number one. So this is creating more complex or let's say solution, being able to deliver solution for more complex risk that we have never been able to do before, was not able to do before. Now, at the same time, when you look at traditional insurance, which has been offering for 1 century standardized policy, now we are part of a digital ecosystem that progressively is not yet here totally, but enable modular, customizable solution where a business now can assemble coverage based on their risk profile. And of course, last point coming to my mind is clearly the speed and accessibility to insurance, which is bringing the new digital world. So what previously, for example, was requiring months of paperwork or maybe weeks of paperwork, like physical inspection, manual underwriting, now everything can happen in a couple of days of hours.
Let's talk about sectors for a moment. You work closely with trade credit, with aviation, a transportation risk. Which sectors are under the most pressure at this point in time, and why?
I will speak about all sector in general, and I will come to trade credit insurance. So what we see for trade credit insurance, the demand is rising sharp as business seek to protect cash flow amongst global economic uncertainty, but at the same time, we feel that insurers start to face capacity constraints. Okay, and so businesses are extending their credit lines to counterparty in markets that sometimes insurers are not totally able to understand. This is a cross-border risk. And the demand is definitely, as I say, sharp in terms of trade credit insurance. So this is, let's say, one booming sector, and we can see it nearly every day. And mainly coming when we talk about SME from the banking sectors. I think you asked me the question earlier. I mentioned about the contribution of the banking sector to Middle East and Africa, especially for SMEs. So this one is definitely a growing part. The second sector, which is growing but facing challenges as well, is aviation and airline business. Okay. And of course, the first challenge they are facing is that they are growing, yes, but they have to keep being profitable. And the second challenge, or maybe the first one at the same time, is they have to retain key people, starting with the pilots. Over the last 2 years, we acknowledge a growth in the number of loss of license insurance policy that are required by this organization for their pilot. Basically speaking, this insurance product is like a life insurance, is to give a kind of retirement or life package when a pilot cannot any longer fly, mainly for medical reasons. So this is the 2 points, 2 sectors, or 2 products I mentioned where we see a pressure, a challenge, and a growth at the same time.
Let's look ahead to the next year, 12, maybe 24 months. What risks should business leaders in this region, Africa and the Middle East region, what should leaders be preparing for now?
Tim, we got the same question as your question now internally, like 2 days ago. We're all together with our various heads of business, and we came, basically speaking, to 4 classes of risk for 2026. The first one will not come like a surprise, especially for Africa. It's everything about election cycle and political volatility. Okay, you see what happened. We all see what happened. So this is the risk number 1 that organizations are facing in the region. Number 2, And here it's something pretty new. This is, I will say, the supply chain reconfiguration of the risk. Okay, the way people interact, where their supplier, in which market, new supplier, new market, new interaction. So this is a reconfiguration of the supply chain. Number 3 is still on the agenda. It was here last year, but I think this year it will still be here, and with maybe a bit of more strength. This is what we call business interruption related to climate. The impact climate can get on the loss of income of many organizations, starting with people being into the agricultural sector. Okay. And the last one we identify is cyber threat escalation. You have definitely more and more digital tools, more and more technology. We have the quantum computing coming into the picture soon, so we can expect a growth in the number of cyber threats, cyber attack.
Final question for you, Nolwenn. If there's one shift in mindset, in thinking that business leaders should make about risk this year, what do you think it should be?
30 years ago, when I started in the sector in insurance, the main shift was people were saying at that time, you have to move from insurance to prevention, safety measure. I think we are there now. We are into the prevention world, but now we have to build up businesses which are clearly resilient. I know it's a very commercial name. Everybody talk about resilience, but this is something companies should consider. How should I become resilient, whatever it happens? If I cannot avoid the risk entirely, what can I do to navigate through for what's happening and to get my business still growing and surviving number 1 and growing number 2. And I think that this is where ourselves, like risk consultant, insurance advisor, we have something to play to support our clients. It's not only outsourcing the risk to insurance, it's to help them move from prevention to resilience.
Nolwenn Allano, I appreciate your time this morning. Nolwenn is the Chief Commercial Officer of the EIRS Digital Insurance Ecosystem. Pleasure to speak to you. Thank you for joining us.
Same here, Tim. Take care. Bye.
Appreciate it. Insurance and risk on the morning drive. This is Mira Business FM. Like, subscribe, always appreciated wherever you join us from, and get in touch. info@mira.fm is the email address. Tell us what you think of the content that we produce, the people we speak to, the topics we discuss. Everything we do is available to listen and or watch again. So find us wherever you get your podcast from. Just search Mira Business FM.